Hey everyone, and welcome to another deep dive, this time into something that's, well, pretty crucial these days, the whole interplay between global trade, technology, and you guessed it, the ever-evolving job market.
It's a bit of a tangled web, isn't it?
Totally. But luckily, you sent over this really interesting study that caught our eye.
Yeah, this one's a deep dive, literally.
For sure. It looks at a ton of data. We're talking 45 OECD and G20 countries.
Wow.
Over several decades. So we're not just talking about the latest trends here. This is about the long game, how things have been shifting over time.
Right, because those big economic theories about trade, they're always evolving too.
Yeah.
What we think holds true in one decade, well, it doesn't always pan out exactly as predicted down the line.
Exactly. And that's what makes this study so relevant, because it digs into those assumptions we tend to make, like more technology automatically means more jobs, or that export diversification is always a win-win.
It's easy to fall into those traps of overly simplistic thinking, right?
For sure. But this study, it goes beyond the surface. It really dissects those ideas to see how they actually play out in the real world, especially when it comes to different types of jobs.
Yeah, and that's key here because not all jobs are created equal.
Right.
We've got to look at how these global forces are affecting folks with different skill sets, different backgrounds.
Totally. And the study kicks off by acknowledging that the world has gone through some, shall we say, rather significant events lately, events that have really shaken up the global economy.
To put it mildly, yeah. I mean, 2008 was no walk in the park.
Not at all. The 2008 recession, the more recent COVID-19 pandemic, those events forced everyone to rethink some of those classic economic playbooks.
Absolutely. Relying on a single export or even a single trading partner, those strategies suddenly seemed, well, a lot riskier than they used to.
It's definitely a wake-up call for a lot of countries. So this study, it really zeroes in on two major players in the whole employment game. Export diversification, which they often just call ED, and information and communication technology, better known as ICT.
Right, so ED is about how diverse a country's exports are. Are they relying on just a handful of products or services, or are they casting a wider net?
Exactly, and ICT is all about how connected a country is digitally, think internet access, mobile phone usage, that sort of thing.
And the study didn't just look at how these factors affected overall employment. They wanted to see if there were differences in how they impacted different skill levels.
Okay, so not just more jobs or fewer jobs, but more jobs for whom kind of thing.
Exactly, because it turns out, and this is where it gets really interesting, technology's role in all of this is a lot more complex than we might assume.
Okay, now you've got me intrigued. Let's dive into that. So, is it as simple as more tech equals more jobs? Or is there more to the story?
It's a lot more nuanced, actually. It's not just about having more tech. It's about what kinds of technology are spreading and who has access to them.
Okay, now that's interesting. So what did they find? What kind of nuances are we talking about here?
One of the big ones was the difference between mobile phone use and internet access. They actually had pretty distinct impacts on jobs.
Huh. I never really thought about those two as being so different in terms of, like, their effect on the job market. To me, they're both just, tech.
Right, exactly. But it turns out they play out in really different ways. Think about mobile phones for a second. They're pretty ubiquitous now, even in countries where other types of technology might be lagging behind. They're relatively cheap, easy to get, and that accessibility makes a big difference.
Yeah, that makes sense. So how does that accessibility play into the job market?
What the study found is that increased mobile phone use was actually linked to growth in lower skill jobs, especially in developing economies.
Interesting. I can see how that would be the case, especially in those contexts. What kind of jobs are we talking about here? Give me some examples.
Sure. Think about things like ride-sharing services, mobile money agents, delivery drivers' jobs that really rely on mobile communication, but don't necessarily require a ton of formal education or specialized training.
Right. So mobile phones kind of become this entry point, a way for people to participate in the digital economy, even if they haven't had access to, say, a fancy tech education or years of specialized training.
Exactly. It's about opportunity. But here's the thing. Internet access, especially broadband internet, that's a different story. That's where things shift a bit.
How so? I mean, you'd think the internet would have a similar effect, right? Opening up even more opportunities for everyone.
Logically, yeah, you'd think so.
Yeah.
But the study found that greater internet access was actually linked to more jobs for those with higher skills, not so much for lower skill jobs.
Really? Why is that? That seems counterintuitive.
Well, it comes down to the types of skills needed to really leverage the internet.
Yeah.
It's one thing to have a phone and use it to find work or make transactions. It's another thing entirely to navigate the internet effectively, to be comfortable with e-commerce, online marketing, data analysis, all those things that businesses are doing more and more these days.
I see what you mean. It's like, yeah, anyone can learn to use the internet, but to really excel in those online spaces, you often need a different kind of skill set.
Exactly. We're talking digital literacy, critical thinking, problem solving, often specialized knowledge in a particular field. And those skills, well, they tend to be more concentrated among those who already have a higher level of education.
So it's not just about access then, it's about the ability to actually use that access effectively.
Right? The internet can be this incredibly powerful tool, but if you don't have the skills to wield it effectively, it's not going to magically level the playing field. In fact, it can sometimes have the opposite effect, widen the gap instead of closing it.
Right. If anything, it highlights those disparities that already exist. So we've got this interesting dynamic where mobile phones, in some ways, can help to level the playing field a bit, especially for those with lower skills, while internet access might actually exacerbate existing inequalities in the job market.
Yeah, it's complicated, that's for sure. And it ties into this idea that economists call skill-biased technological change. Basically, it means that as technology advances, the benefits of that technology, new jobs, higher wages, etc., they tend to flow disproportionately to those who already have the skills to take advantage of them.
It's like that saying, the rich get richer, but applied to the job market.
Exactly. Okay, so we've got tech playing out in all these interesting and sometimes unexpected ways.
Okay.
But what about export diversification? Where does that factor into the whole employment equation? Because I'm guessing it's not as straightforward as we might assume either.
You're telling me I'm ready for another curveball? Lay it on me. What did they find? Yeah, I'm ready for it. Export diversification. What's the scoop? Spill the beans.
Well, you're right to think it's not so simple. It's not just about diversify at all costs and everything magically works out. There are actually two main ways that countries can diversify their exports. They can focus on exporting a wider variety of products, or they can try to tap into new geographic markets, expand their reach that way.
Okay, so two different flavors of diversification.
Yeah.
Got it. What'd they find out about those?
This is where it gets kind of wild. When they looked at overall employment, they actually found that the countries that focused their exports, as in concentrated on a smaller range of products, they actually saw more job growth overall.
Whoa, really? That's counterintuitive. Wouldn't spreading out your exports, having more irons in the fire, wouldn't that be better for jobs?
You'd think so, right?
Yeah.
But there's a method to the madness, potentially. One explanation they give is the idea of comparative advantage sometimes. Countries just do better when they focus on industries where they already have a leg up, so to speak.
So it's about playing to your strengths.
Exactly. If you've already got the resources, the infrastructure, the expertise in a particular area, why not go all in? Become the go-to for that thing on the global market.
Right, dominate your niche. Makes sense. But what about the impact on workers with different skill levels? Does that change the equation at all?
Totally. So while concentrating exports seemed to be good for overall employment, they found that product diversification, offering that wider variety of goods, that was particularly beneficial for those with lower skills.
Interesting. So leaning into your existing production, that lifts all boats. But when it comes to product variety, that seems to give those with lower skill levels a boost.
Oh.
Why would that be?
Well, think about it creating variations on existing products. That's different from, say, developing a whole new industry from scratch, right?
Right, like tweaking a recipe versus inventing a whole new cooking technique.
Exactly. You don't always need super specialized knowledge or training to make those kinds of adjustments, to adapt existing processes.
So product diversification, more accessible for those with lower skills. What about going global, the geographical diversification? What's the story there?
Now, that's where we see those with higher skills really pulling ahead. Because expanding into new geographic markets, that brings a whole new level of complexity to the table.
Oh, for sure. You've got different cultures to consider, different regulations, even different languages to navigate.
Exactly. You're not just selling a product anymore. You're selling an experience. And that experience needs to resonate with customers who might have completely different expectations and preferences.
You really have to understand the nuances of each market, tailor your approach.
And that takes a specific skill set. Language proficiency, cultural intelligence, marketing savvy. Those skills are usually more concentrated among those with higher levels of education.
It's like that next level of expertise. You've got to be adaptable, a problem solver, not just good at what you do, but good at understanding how what you do fits into a much bigger picture.
Nailed it. Okay, so we've got these really interesting connections between export strategies, technology, and skill levels.
Yeah.
But we'd be remiss if we didn't mention some of the other factors they looked at that influence employment.
Right, because it's never just one thing, is it? What else did they consider?
Well, they found that past employment trends played a big role. Basically, if a country has a history of strong employment, it's more likely to continue on that path.
Interesting. So, past success breeds future success. Makes sense. What about overall economic growth? Because you'd assume that a booming economy would mean more jobs for everyone.
Logically, yes. And in many cases, that was true. They found a pretty clear link between economic growth and job creation, especially for those with lower skills. But, and there's always a but, isn't there? Sometimes rapid economic growth actually went hand in hand with a decrease in jobs for those with higher skills.
Whoa, really? How does that work? If the economy's doing well, shouldn't everyone benefit?
You'd think so, but it goes back to what we were talking about earlier, the difference between developing a new product or technology and then scaling that product up for mass production.
Ah, okay. I'm starting to see where you're going with this.
You need those highly skilled workers in the beginning, the innovators, the designers, the engineers, to get things off the ground. But then, once the product is ready for prime time and demand takes off, companies often shift their focus to efficiency. Producing as much as possible, as cheaply as possible. And that often means relying more on lower skill, lower wage labor.
Right. The nature of the work changes. Fascinating. It's like this wave of innovation, and the people who ride that wave, who benefit the most from it, well, that can shift over time. Okay, so we've got past employment trends, economic growth. What was the last thing you mentioned? Investments.
Yeah. They distinguish between two main types of capital investment. Domestic investment, which includes things like government spending on infrastructure, and foreign direct investment, often shortened to FDI, which is when foreign companies or individuals invest in a country.
So money coming from inside versus outside the country. Got it. How did those two stack up?
Well, domestic investment seemed to be pretty universally beneficial, more jobs across the board. But FDI, that one's a bit more complicated. While it often brings in new capital and technologies, which can be a good thing, it was also frequently linked to job displacement, particularly for highly skilled workers.
Interesting. So FDI, it's not a magic bullet for job creation. It can have its downsides. Why would that be? Why would foreign investment sometimes lead to fewer jobs, especially for those with higher skills?
One word: efficiency. Sometimes when foreign companies invest in a country, they bring in their own advanced technologies, their own ways of doing things, and those technologies might be more efficient, more cost-effective, but also potentially more automated. And that can sometimes mean that certain highly skilled jobs become, well, obsolete.
Wow, so it's like this trade-off. FDI can bring in new opportunities, but it can also make existing ones disappear. Man, this is a lot to wrap our heads around. We've covered so much ground today. Export diversification, technology, past employment trends, economic growth, investment. It seems like there's a lot to unpack here, a lot to consider. What would you say is the key takeaway from all of this? What's the big picture message?
The big picture message is that there's no one-size-fits-all solution when it comes to creating jobs and boosting economic growth. Every country is different. Every context is different.
So no magic bullet, unfortunately.
We're afraid not. But that's where good policy comes in, right? Understanding these complexities, these nuances, that's the first step to designing policies that actually work, that create sustainable employment opportunities. For example, for countries with a large, lower-skilled workforce, focusing on product diversification, at least in the short term, that could be a really good strategy, a way to create jobs quickly. But long-term education and skills training, those have got to be top priorities.
Right. So you meet immediate needs, but also equip your workforce for the future, because who knows what skills will be needed 5, 10, 20 years down the line.
Exactly. And it's worth noting that this particular study, while fascinating, really focused on the two ends of the spectrum, low skills and high skills. But what about everyone in between? That's a huge chunk of the workforce, and there's still so much we don't know about how these global forces impact their jobs, their livelihoods.
That's a great point, and it's a perfect jumping-off point for our listeners to ponder. We've been looking at this through a national lens, but what about zooming in? Within a single country, how do these dynamics play out in different industries? Do those patterns hold true? Are there sectors where, say, product diversification actually leads to more high skilled jobs, or where internet access really does benefit everyone? Lots to think about. This has been such an insightful deep dive. Thanks for joining me and walking us through it all.
My pleasure. It's always a good time to geek out about economics.